Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of FuelCell Energy, ticker symbol FCEL. And so I wanted to do a follow-up on this one after the last video that I put out on January 8th. And the reason why I did that is because of a comment. So thank you for the comment. And the comment was pointing out that I was correct in that price would come down, test the top of the wedge as support and bounce. And so I was, more or less right. I also did suggest in that video that this green candle could suggest a reversal signal, given that it looked like it might be a spinning top, but we did not get that. We did get a continuation down. I had suggested price might be bouncing around $1.20, but it went down to $1.09, and then it did go up. And so from that bottom there, it does look like we got a 40% move, but then it has moved down. And so where do I see price going moving forward? And so I've just done some Fibonacci retracements that could suggest where it's going. Also, I do have some perspective looking at the chart where it will be going. And so I'll share that at the end of the video, but first I wanted to go over some of these levels. So here from this retracement from the high that was hit on December 27th to the low that was hit on January 17th, there are a couple levels that stand out to me, one being the 382 at a price of $1.37.7, kind of coincides with the top over here. And then also the 236 at a price of $1.26.7, coinciding with the resistance that we've recently been bumping into with these wicks up here, as well as some resistance over here. So I do think those are two levels to be paying attention to. And then also, I guess if I do take a step back, I do have this orange retracement from the low here hit on October 30th. That was at a price of 98.1 cents. And that then ran up to the high on December 27th. And so from that retracement, really the one level that stands out to me is the 786. That is at a price of $1.16.5, just being below current price as I record this during market hours on Wednesday, March 6th. But we did get a wick below that level today, and we've had multiple wicks testing that level. So I do think it is an important one to be paying attention to. And then also, I suppose, another level from this retracement is the 100%, the low at 98.1 cents. I do think it is quite possible that we do revisit that level, so something to keep in mind. And then zooming in based on this retracement here, that's in white, going from the low that was hit on January 17th up to the high that was hit on February 12th at a price of $1.52. There's, I guess, just, really one level to complement the other levels on that retracement. That is the 786 at a price of $1.18.2. So again, just being below current price, but, a lot of days over the past week testing that level as support. So I do think it is pretty important to be paying attention to that one. And so, hopefully we can break above this yellow retracement here at a price of $1.26.7. But given that we've seen so many wicks to that level getting rejected from it, I do think it's unlikely that we can reclaim it as support. And also there is one pattern that does stand out to me as potentially forming, might stand out to you, but that would be the head and shoulders pattern where you potentially have a left shoulder here, the head right here, and we are potentially forming a right shoulder here, the neckline based on these two low pivot points, one being the low that was hit on February 5th, the other being the low that was hit on February 26th, and so that's how you get this purple neckline. And so I could see that if we do come back to this level here at $1.09, if we do come back to that, it could be suggesting that we will be testing this neckline and we could be breaking lower. And another thing that kind of supports that bearish thesis is that from the high here at $1.52, it does look like we have formed a flagpole with some consolidation over here, which could be a bear flag. It could, however, also be interpreted as a bull flag since we did get a bounce before forming that consolidation, but I do feel like there are more bearish signs moving forward than bullish signs, so that is something to keep in mind. I don't see any bearish divergence though. With earnings coming up though, on the 7th, so tomorrow. Pretty crazy. I didn't realize that as recording this, but I do think that it could be suggesting that price will be breaking lower following earnings. But it could be breaking above this level at 126.7. So that is also a possibility, but if it is to break to the downside, we can do a measurement from this head and shoulders to get an idea of where price could be going. And so if I take a measurement from the top of the head here down to the neckline, that represents a move of about 30 cents. So we can move that over here to, potentially the break of that neckline. Let's just say it's right around here. If we do break below $1.09, 30 cents below that, if I do adjust the axis, would be coming down to a price of right around 78 cents. That would also correspond with breaking below $1 a share. Does correspond with this orange line from the previous, I believe, all-time low at 98.1 cents. But also I did do an extension from this Fibonacci retracement corresponding with a price of 82.4 cents, similar to the measurement here at 78 cents. So I think it is quite possible that price could be not only dipping below $1, but hitting a price of right around 80 cents. So something to keep in mind moving into earnings. Do trade cautiously, but also earnings are very volatile. So this could be going to the upside. I don't want to destroy any hope, but I also don't want to be giving hopium because the chart does look fairly bearish. Also, looking at this in a bigger time frame perspective, we do have what looks like could be a flagpole here, bearish consolidation over here with a break to the downside. A lot of bearish signs are lining up, so I would trade pretty cautiously around earnings because I think it could be going lower, but I of course could be wrong. As you know, those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and thank you for the comment.